So now, firstly, welcome to everyone for in CA Bytes, and here I will begin with chapter number 3, money market. So as you can see on my screen, I will firstly begin with unit number 1, which is money demand. And here what you can expect from me that I will give you full concept understanding, and even you can revise your concepts very easily. Fine, so let us begin. Yes. So firstly what we do is, let's go through to the module. Yeah. So here I have module, and I have some even did highlight it to the points so that you can understand it very easily. And some of them finds problem to write how to write the answers, right? So here it is. And yes, if anyone wants to give me suggestions, or what I need to improve in me, so that you can comment me in your here. So let us begin with the chapter. Fine. So firstly, I'm giving you the overview of this unit. So firstly, what this unit contains. This unit contains mainly of 4 parts. Here you can see the chapter overview, means whatever it contains. It contains introduction, functions of money, demand for money, and there are various theories on demand for money, right? There are some Keynesian theories, and before Keynesian theories, which are covered in A portion, and there are post Keynesian theories which are covered in B portion. Fine. So what I will make you do today, today we will complete the introduction section, the function section. Okay, the introduction section we will complete, and function section we will complete. We will complete with demand for money even, and some of the theories I will cover with you. So let's read out from the module itself. Firstly, what it is contained in introduction. It is a very basic things, right? You had studied in your class 11th or 12th economics that money is money is somewhat which has replaced the barter system, which has totally reduced the barter system, or the importance of the barter system, and it had overcome the limitations of the barter system too. Earlier what you have to do, there are two persons, one is Mr. A and another one is Mr. B. Mr. A wants rice, and Mr. B wants wheat, but Mr. B have rice to exchange and Mr. A have wheat to exchange. So they both exchange it, happy, go to home, finally deal done. But it is not that too easy. Not necessarily Mr. A have rice and B have wheat, and they want the each other each other commodities in return, right? So that has created the most problematic things. And yes, we know, and we even studied in our class 12th the evolution of money. Like many other things had came, what we say, animals, coins, and etc things, you know that about that, so need not to go in deep about this. So yes, let's start from this module. What here it is in first para said, it is the center of every economic transactions. Means what? Like you want to sell any commodity, exchange it for money. You want to buy anything, exchange it for money. You want to purchase anything, then purchase it for money, right? So it is at center of every economic transactions. Like there is nothing without money. It is accepted as a means of payment. Earlier times we used to take rice and give our wheat, but now we have to take the rice and give the money, right? So it is accepted as a means of payment and medium of exchange. If you have money, you can buy anything and you can purchase anything, right? So it is means of payment and medium of exchange. But there are two purpose in this. What they are? First, it is policy purpose, right? Policy purpose, and another one is statistical concepts. Policy purpose, it what in money means in the policy purposes. It is a set of liquid financial assets and the variation in the stocks. Liquid financial assets means what? That assets which can be converted into any other things or any other assets. Like you have money, you want chocolate, go to shopkeeper, give them money, buy a chocolate. Fine, very easy. Liquid financial asset. Variation in the stock means what? You have at the beginning of the year you have 5,000 units of any commodity, and now you have 3,000 commodity. So in exchange of 2,000 commodity you got what? Money, right? So as per policy purpose, what it is a variation in stock and liquid financial asset. And as per statistical concept, what it is a liquid liability of financial intermediaries, sorry. Means what? Like you have 100 rupees, so it is the RBI's liability to provide you that 100 rupees satisfaction, the commodity which gives you 100 rupees satisfaction. Fine. Now let's go to the another part, that is general money. What it is generalized purchasing power. What it is generalized purchasing power means what? You have 100 rupees, you can afford anything which cost 100 rupees, right? It is a generalized purchasing power and generally acceptable settlement. Like nowadays no one, there are rare who says that take this and exchange it for any other thing. Right? Rather, what you do in today's time, you exchange it anything for money only. Okay. And yes, here I have highlighted some words with dark blue marker, which are the important words as per me. Yeah, again saying important words as per me. Okay, you, if you find anything else important, you can mark the same, but this can help you more. Fine. So, yeah, where we were generally acceptable in settlement of all the transactions and discharge all the obligations. Means what? You had gone to shopkeeper, purchase a chocolate, right? That by that time you don't have money. So after 1 or 2 days, you go and give him money and you discharge your liability. Yeah, this is a very simple example. You can connect it even with your life or with any big examples. Fine. It is everything. Yeah, now most important line, medium of exchange is not necessarily money, right? What it does means that every time money is not only the medium of exchange. As I told you that one commodity yet nowadays can be exchanged for other commodities, but it is very less. But here the example given is of bills of exchange, right? Everyone here knows the bills of exchange. Even you have studied in your in foundation what are the bills of exchange. Fine. So if you don't have money at present, you exchange the bill which you have. Fine. And it is a totally liquid asset, as I given you example earlier itself. Yeah. Next what it is not necessarily having a intrinsic value, right? Money is not necessarily having an intrinsic value. Nowadays, fiat money, which is high powered money, that money which are being introduced by RBI are also being applied and are in the transaction. Okay, now here one word is given, commodity money. What the commodity money means, right? You have 100 rupees, fine, and you gone and you purchase some commodity, let's say chocolate only. So you gone and you purchase the chocolate, right? Then from money which you bring, which you bring the chocolate is known as in commodity money. The money which takes the form of the commodity, money which takes the form of the commodity is known as in commodity money, right? Here some examples are given, you can read it by yourself. Okay. Next, going further, yeah, I told you that fiat money is also now being used as a medium of exchange nowadays, and the law even made it as a legal tender. Yes, it is most important to remember this thing, because many times they ask you to explain the fiat money as a legal tender or something, where you have to write the above points which we had discussed. Yes. And what is written in this box is that only the definition which we had referred earlier over here. Wait, I show you. uh, Here. the in first paragraph what we referred is given in that same box. Okay, so we are done with the introduction. So many of them find difficulties that okay, we learned now how to remember that things. Many of them have problems, so for them I have one thing. Yeah, it's over here. So what we had learned in the introduction, like first it is definition. Yeah, for this notes and this highlighted ones, I'm giving you the link of the Telegram channel where you can see them the same. I will upload them there. Okay. Firstly, it is introduction. What we had done in the introduction, the definition which we learned in the first paragraph. I show you from module 2, the one which was like the box. Yes, the means of payment, medium of exchange, all this is the type of definition which you had learned in chapter now in standard 12, sorry. Yeah, next what we had learned the usefulness, like to obligations, and you can exchange it for anything and more. Okay, and next what we had learned, the third part we had did intrinsic value, like fiat money is a legal tender, which I told you, right? And next thing what we learned, it is a totally liquid asset. I had given you the example of the same too, and even I had given you the example of commodity money and fiat money. Fine. So in this way you can easily remember what were the points covered in the introduction. Yeah, okay. And yes, I will provide you the link of the Telegram so that you can take the notes of the same. Okay. Next, moving further, what we will learn now functions of money. Okay, these are two easy concepts which even we had done in the class 12. Just what here we are doing it revision only. Fine, these are two easy things. Okay, so first thing, what in first paragraph, what they are saying, that again it is a medium of exchange, which we had seen only, right? No need to explain that. And yeah, it is not directly satisfying the human wants. Like you want a sofa, so what you will do? You will make the sofa of money and you sit over there. No, you go and purchase sofa. But how you can purchase that? You can purchase it through the money. So it indirectly satisfies your human wants. It was our simple language. In economics language, what it is said, it commands the purchasing power. What it does, it commands the purchasing power, and it reduces the inefficiencies and transaction cost in barter exchange. Sorry, I forgot to highlight the same. Yeah, I'm highlighting it for you all guys. Transaction cost in barter exchange. Like what we have to do, we have to firstly find the one who need the same things like us, and or revolve around the things, so it carries much cost, right? And it is inefficient. The money, you simply go and purchase the wheat, or you have the extra rices or something, keep it in the market, sell it, earn the money happily, things are over. Yes, now there are separation of transactions. Means what? A shopkeeper will sell the chocolate, right? So he can earn the money, so he can get the money. Now he want rice, so he go to the shop where the rice is being sold. From for there he give their money and purchase the rice. So both the things are separated. In which terms? In time and place. In which terms? In time and place. Okay. Next point. So you are finding it easy? Yes. And if you have any queries, even I'm providing you the Telegram link where you can text me, right? Next is unit. Another function of the money. What it is? It is unit of value or unit of account. Means what? Now in India we have rupees. So we everything measure in what? That potato costs rupees this much, tomato costs rupees this much, so in this way. Okay. And next, it is measured and recorded in terms of money. It is a common denominator, like everything are denominated in money only, like not potato are not in dollar and tomatoes are not in euros, everything are in rupees only, common denominator. Fine. Okay. Next, what it is? Yeah. Next, expressing the value of each goods or services. Like it everything can be termed in rupees, or you can say that in form of the money, like potatoes, tomatoes, or any commodity you can find their value in terms of rupees. Okay. Next, we can exchange everything for a single commodity. Like you need not to go through like for potato, it is not measured in tomatoes value. Like four potatoes is equal to two tomatoes. No, four potatoes is equals to this much rupees. Two tomatoes is equals to this much rupees. Everything is exchanged for what? Money. Fine. It reduces the number of exchange ratios. For this much potatoes, this much tomatoes, this much tomatoes, this much rice, and all. It creates a mass, which is not good, right? So, for that, we have money, and even all the goods are comparable. Find that potatoes cost this much, onion cost this much, tomato cost this much. So here everything can be comparable. It is a measuring rod, which we already know very well. Yeah. One more important thing, purchasing power of money is the inverse of average or general level of prices. Means what? Suppose the potatoes are costing rupees 20 per kg. Fine. It is fine, affordable, everyone can afford it. So price is low, purchasing power is high. Again, vice versa, like if potatoes goes 50, 60 rupees, then not everyone can afford, right? So purchasing power reduces as price level goes up. Fine, you understand this? Now, next what we do, yeah, next third one, standard of deferred payments. Means this is very common, but many of us know, sorry, some of us only know the economic term. You know, might be sometimes you've gone to shopkeeper, you told him that I will pay you tomorrow, day after tomorrow. What it is? It is standard of deferred payment, right? Future payments. Why it is? Because we have money right now. They know us. They know that we will not run away by taking his money. Fine. So these are the things. Okay. Next, it enables the growth of the financial and capital markets. What it is do? It enables the growth of the financial and capital markets. Like we have more money, we can invest. Fine. In the same way. Next, variation in the purchasing power of money due to inflation or deflation reduces the efficacy of money in this function. Yes, the most important line. Here I will explain you the same. Okay, if there is inflation, means everyone wants money, everyone have money, right? But in deflation, lots of suffer from the problems of less money and all. So if you say anyone that I will pay you tomorrow, then they will say no, no, I want it now, it is emergency or anything. Why it is? Because it is deflation. It doesn't mean that they didn't trust you. Yeah, many of us are like that who didn't do the payment, but that is the different part. But yes, due to inflation or deflation, the same things differs. Okay. Next what it is? Store of the value, right? पैसे कभी खड़े खड़े खराब हो जाते हैं क्या? No. So you can store them. Many of us have in lockers lakhs and lakhs rupees, right? But why it is? Because we have store value. Fine. Okay, next. Yeah, other assets like bonds and many of other assets are store value investments, but they have transaction cost, brokerage cost, interest. They have interest return, but that is the different thing. And that is the opportunity cost even to keep the money, but not not that difficult. Fine. You can go through if you have nominal amount of interest rate in the market, you can keep money with you. But high interest rate, then okay. But here it is not explained over here the same. Fine. So we are keeping it as the most liquid, and it has the store value better than other assets. Okay. What is liquid assets? We had seen earlier only. Fine. Okay, let's move to another part. Yeah, permanent store of value, which I already explained you. And yeah, money is the only asset which has perfect liquidity. You have bonds, but if you want to convert it into money, then it may cost you brokerage cost, or you may have to suffer the loss if the market is in down, right? And all the assets other than money lack perfect reversibility. Means what? Today you had invested 100 rupees in bonds. Is it necessary that you will get after some time the same 100 rupees? No. It what it means, it lacks perfect reversibility. You cannot get the exact amount. Got it? Yes. So next, what it is, value in payment is not equal to the value in receipt, which I already explained you. Yeah. After listening this, once go through the whole module, mark all these words, then also finding any difficulty, anytime contact me. Okay, through my telegram. Okay, fine. Next, these are some general characteristics which we had already seen. That this is generally acceptable, durable, recognizable, and difficult to counterfeit. Yeah, what it means? Difficult to counterfeit means, is it possible that every one of us can print the notes? No. So it is not easily reproducible by public. Fine. It is reverse. It is relatively scarce. If money should not be scarce, then why you and me are working? We all are working for money only. Okay. We all will be chartered accountants in future. For what? To earn only. Fine. Whether be chartered accountants or whether be doctors, all are going to do anything for what? For money. Fine. It is portable or easily transported, right? And next is uniformity. Uniformity, like you have the rupees 10 note of pink color and anyone else have of green color. No, it have the uniformity. Yes, it is divisible into smaller parts, like you can have a 100 rupee note or 10 rupees notes. Fine, no doubt. Okay, once let's see the functions as the pointers. Yeah, so here we go. Yeah, what we had seen here. 1 minute. Yeah, medium of exchange. It does not indirectly satisfy the wants, and there is a separation of the transactions. Unit of account or unit of value. Sorry. Yeah. Okay, I will add the same and share you that only. Next, it is common denominator we had seen. Common denominator and goods exchange for single commodity only. I told you earlier also. Exchange ratios reduced. They are comparable. Tomatoes can be compared with potatoes, and these are the measuring roads, and they are the standard of deferred payments, reversibility, store value, liquidity, and some of the general characteristics. Fine. And here I show you that uh, out of the four topics, like 1, 2, 3, and 4, we are done with one and topic number 2. Fine. And let's complete till demand for money today. And what I do is post you the theories on demand for money in the next video. Otherwise, this will go bit long. Okay. So continuing with demand for money, and we'll post the theories in the next lecture. Okay, let's read demand from the module. Here it is. Yeah. Okay, why money is demanded, right? The demand for money. We have understood the role, meaning, etc. This can be asked you as a direct questions also. Okay. Yeah. It is demanded for its purchasing power. Why you demand money? Because you need things, you need goods, you need services. That's why I demand money. Fine. What we can have command over the real goods, right? Then demand for liquidity and demand to store value. We have demand for liquidity and demand to store value. Next, hold money because it is liquid and offers the most convenient way to accomplish their day-to-day transaction. I will explain you this thing with example. What it is said in this? In this, it is said like, you go to the shopkeeper. You told that give me chocolate and in exchange of that, I'm giving you bonds. Will he accept? No, he will say I don't know anything about bonds. give me the rupees. Fine. So we have to hold money because of that. And as explained you earlier, the most important thing, that is, it is liquid. Fine. Yes, important role in determination of interest, prices, and income. This can be asked you as a short question of 1 or 2 marks, and so it is necessary to remember. So I had marked you. Okay. Next, the variables on which demand for money depends. Demand for money depends mainly on these variables: income, general level of prices, rate of interest, real GDP, and degree of the financial innovation. What here I explain you one by one. Firstly, income. If you have more income, what you will do? You will do here, if you sorry if you have income, then if you have higher income, what you will do? You will purchase more money, you will purchase more commodity, because you have high income, right? Next, general level of prices, as I explained you, that it has the inverse relation, right? Which I explained you earlier only. Yeah, rate of interest. I had explained you about this, even rate of interest, that higher the interest rate, higher would be the opportunity cost, lower the demand for money. If you are being provided 10 percentage rate of return and earlier, and now you are being provided with 20 percentage, will you still keep money with you? No, you will keep some of the money with any of the banks or something, because otherwise it will give you opportunity cost of loss of interest. Fine. Next is real GDP. Like the GDP is high, so sorry, the GDP is high, so purchasing power and all the economic things and all are also in high. And if it is low, then low purchasing power, low demand for the money. Fine, continue. Now, what I was saying you, that degree of the financial innovations means what? That nowadays ATMs, debit cards, credit cards are increasing day by days. So what we do is, we will then keep the money in the bank and pay with debit cards, like we do in the online payments or anywhere, even in the small shops they have debit cards or ATM machines, right? So yes, if they are more innovated, then we will pay through that only. Fine. And yes, we are done with this topic too. Let's go to through the pointers. Yeah. Okay, what we had seen why the money is being demanded. Like it is being demanded for what it is said. Yeah, we had seen that. I show you from the module only. For purchasing power, command over the real goods, and all the things due to which we were demanding. Fine. And liquidity and demand to store value and all we had seen. Yes. Next topics. Yeah, important role for the money demand we had also seen. Fine. Okay. And yeah, the third one is different factors. I explained you in detail: income, real GDP, rate of the interest, financial innovations. Fine. We had seen that things. Okay. So, yes, how you had felt with this lecture and your excitement for the next lecture, please do share in the comment box, or even you can message me on my Telegram channel, sorry, on my Telegram, and even can follow me on the Insta. ID I will provide you in the description box itself. Okay, thank you so much. Share it with your friends, family, like it, and subscribe my channel for the continuity of the next part. Yes, thank you everyone.